But it was interesting. Apparently, was an executive order that was signed at 8:45 a.m. this morning. And what we understand is that some 900 troops will be going. 600 will basically be redeployed in the area. But at the end of the day, who does this actually benefit? When I spoke to Mike Pompeo just a week or so ago, I asked him, what does the Trump doctrine, asked him, what does all of this mean? Read the tea leaves for me. And he said, we're just a government and an administration that is based in reality. And the reality of the situation is it's getting more and more unsafe in the Middle East and that we have to be there.
And so what's your gauge of all of that in terms of the likelihood that this escalates significantly more? Because on the surface, it feels like tensions are escalating, and yet the oil price is collapsing, which is not what you would expect.
Just so many different variables here. Obviously, we have an overmarket. The market is oversupplied at the end of the day. You also have to remember, of course, that when we talk about taking away Iranian crude from the market, that doesn't necessarily mean that they're going to really ever get to zero. I mean, my Iranian sources are telling me there's absolutely no way that could actually happen, and that 500,000 barrels per day is actually their magic number. And then adding all of that to the fact that when you're sitting in Saudi Arabia, for example, I mean, lower oil prices obviously bad for Saudi Arabia, but keeping the oil market stable is going to be better for them long term. So if you're talking about using oil potentially as a weapon of foreign policy, you've got to sit back and wonder, yes, it's playing well domestically to have these lower oil prices, but internationally, foreign policy-wise, who does all of this benefit? The Chinese.
Barb, energy stocks are down 3.4%, worst performing sector on the S&P so far this week.
Yeah.
Are you an owner?
No, I don't own energy stocks again because of oil, although I'll tell you some of the names, the nice, stable, dividend-yielding stocks like an Exxon or a Chevron, are looking interesting. The problem with oil right now, I think it's not only concerns about if we did a full-fledged trade war and that would slow down the global economy. It really is, as Hadley just said, we are oversupplied. Even if Iran came completely off, the shale production is up hugely the last 6 months. You've got Iraq on, et cetera, et cetera. So, if you wanted to be in oil, you thought you needed to diversify, I think you could go into the big guys, the integrateds, diversified Exxons and Chevrons, because they are down. But as you saw, we had a big increase in oil the last, since the beginning of the year, and oil stocks didn't really participate.
Yeah.